morning. I am delighted to welcome all of you to the fourth biannual Building Momentum Conference that is all about encouraging and celebrating diversity in entrepreneurship. My name's Deb Whitman. I get to lead the Center for Entrepreneurial Studies here at the Stanford Business School. So we're going to dive right in. If you look at the statistics about diversity and entrepreneurship at any moment in time, including this one, it can be a little discouraging, right? So 16%, I would say only 16%, of larger businesses in the United States are owned by women. And that is using a super conservative number for a larger business. Those are companies with $1 million or more in revenue. And only 6% of these larger businesses are owned by Latino founders and 1% owned by Black founders. And I'm pretty sure there's more than 16% of the population who's female, and I know for sure that there's more than 1 and 6% of our population that is Black and Latino. So clearly, we have a long way to go in seeing better representation in just the number of companies around the country. And then if you kind of narrow the lens and look at companies that have raised VC money, it's a little bit more stark, actually. About 18% of all the VC investments last year went to teams that had at least one female founder, and most of that money, about 85% of it, went to teams that had mixed gender teams of founders. And only 1.6% and 1% of VC investment last year went to Latino-founded and Black-founded companies, respectively. So again, we have a long way to go. There's a big gap to close to get to something that looks like equal representation in the world of entrepreneurship. And so this is where, in past years, I've said, but the trends are at least going in the right direction. And that is still mostly true, but last year was kind of a weird blippy year, right? So we had a little bit of mixed messaging last year with the trends. So first of all, if you just look at the number of those larger businesses, $1 million or more in revenue, over the last 8 years, the number of businesses owned by women has grown by 42%. The number of businesses owned by Black founders has grown by 41%. And by Latino founders, it's grown by 52%. The Latino population is adding new businesses in this country faster than any other demographic. And all of those numbers build on a small base, right? It's easier to get 50% growth when you're starting from this big than when you're starting from this big. But still, that's a meaningful change in the number of businesses owned by historically underrepresented founders in the country. And those numbers are all dramatically higher than the average growth rate of businesses in the country. Like, we're seeing more growth from women and Black founders and Latino founders. We've also seen growth in the amount of VC money going to women, to companies that have at least one woman founder. So I mentioned last year it was 18% of all VC money. Back in 2008, it was only 8% of all VC money going to teams that had at least one woman founder. Now, the data is a little more mixed when you look at VC funding for Black-founded and Latino-founded companies, and that's where last year was kind of this weird blip. So 2021 was this record level of investment in Black and Latino-founded companies, and that coincided with a really big increase in VC funding overall that year. And then last year, unfortunately, VC funding overall contracted, but investment in Black and Latino-founded companies contracted even more dramatically. The one kind of little silver lining is that at least the dollars invested in Black and Latino-founded companies last year was still higher than the number in 2020. It was down from 2021, but you saw some progress over the course of the 2 years. We also see some progress in terms of the number of women making investing decisions at VC firms. So 4 years ago, about 11% of female decision-making partners at VC firms were women. Now we're at 16%. 16% is still a pretty low percentage, right? But again, we're seeing things move in that direction. And you might ask, well, does it really matter if VC partners are female or if they're Black or if they're Latino? And Kauffman Foundation recently released a study saying it probably does matter. Turns out women VC partners are significantly more likely to invest in companies with female founders than male VC partners are, and like almost twice as likely. So there's a big difference there. You might also wonder, well, does it really matter if there's diversity in the leadership teams of companies? And here, you may know the research already, right? But on the VC side, first round capital released the results of their first 10 years of their portfolio performance. And they noted that their teams that had mixed gender founding teams outperformed their all-male founding teams by 63%. And then you may well know the McKinsey study that came out back in 2017. This looks at public companies, and they found that executive teams at public companies who had ethnic and cultural diversity had a 33% probability of generating higher earnings before income taxes. So diversity does matter on leadership teams. And while the trends aren't completely positive and the gaps to be closed are still pretty big, we are seeing progress. We're seeing momentum, and we'd like to build on that, which brings us to why we're all here today. My hope is that today we'll each be inspired to take at least one action as individuals that can help make progress with increasing diversity in the entrepreneurial ecosystems. I want to take just a minute to say, in this data, I've only talked about 3 groups of underrepresented founders, right? I've talked about women founders, Black founders, Latino founders. But for our purposes today, we want to be much more inclusive. There are lots of kinds of underrepresented founders in this country, and so we're talking about all of that in a broader, more inclusive way. Those were just the populations that it's pretty simple to get, it's easier to get your hands on the data for. So we're going to offer you a mantra today. Do one thing. Super easy to remember. You're going to hear from some really awesome speakers, entrepreneurs, investors, people running organizations to help educate and prepare entrepreneurs. And my hope is that they will inspire you, they'll sort of spark your thinking about one thing that you could be doing, something in your sphere of control, to help move the needle, to help level the playing field for more diversity in entrepreneurship. So with that, let's get started. Our opening session today is a fireside chat featuring Charley Moore, the founder and CEO of Rocket Lawyer. Rocket Lawyer is one of the most widely used legal services in the world, with operations in the United States, the United Kingdom, and Brazil. And leading the conversation with Charley is Amanda Irizarry, an MBA 2 student who's really active in entrepreneurial diversity. She leads partnership programs for a nonprofit organization called Galvanizer that's working to close the gap for female founders. And she spent her summer internship between her 2 MBA years at Harlem Capital, a VC firm with a focus on investing in diverse founders. So please join me in welcoming Charley Moore and Amanda Irizarry.
Welcome, everyone. I'm super excited to be kicking off the conference. As Deb mentioned, my name is Amanda Irizarry. I'm a second-year student here at the GSB, sadly graduating in less than 2 months, but we're not going to get into that one. I'm also the Chief of Staff at Concrete Rose Capital. Sean will be around somewhere later this evening. And we're thrilled to have you here all today. We're looking forward to kicking off our conference with a conversation with Charley Moore. I'm going to give a little bit more of a background on Charley. Charley is the founder and CEO of Rocket Lawyer Incorporated. His experience as an attorney representing startups exposed him to both the high cost and the high value of great legal advice. He started Rocket Lawyer to deliver high value legal services at a price nearly everyone can afford. Today, as Deb mentioned, Rocket Lawyer is one of the most widely used legal services in the world, with operations in the United States, the United Kingdom, Europe, and Brazil. So with that, Charley, we'd love to talk a little bit about your background and what led you to founding Rocket Lawyer. So you grew up in St. Louis.
I did.
And then you were in the Navy. And then somehow you made your way over to SF. So I would love to hear, what was your intro to Silicon Valley? You've been in the game for almost 25 years?
Yeah.
Is that it? So
yeah. Time flies.
Would love to hear about your intro to Silicon Valley.
Thanks, Amanda. It's great to be here. And thanks, Deb, as well. And it's great to be here in person. I think the last time I joined you, we were all still doing everything remote. My dad had an 8th grade education. He joined the Air Force when he was about 14 years old, and my mom was the first in our whole family to go to college. I grew up, working at my dad's gas stations. He'd saved his money driving trucks long distance, and I have plenty more stories to tell about that. But very blue collar family, and again, my mom was the first one ever to go to schools. So they really valued education, and that was really burned, sort of into me. Even though my dad, and it'll be germane how I started Rocket Lawyer, but even though he did end up being a fairly successful entrepreneur, he always sort of had an inferiority complex because he ended up having 75 or 80 employees, chain of gas stations in Missouri. Really hardworking guy, but he sort of had an inferiority complex because everybody had those formal educations, even though he had a terrific school of hard knocks and was always a lifelong reader. And so really burned into my brain, almost to a fault because of what I'm going to say next. Hey, go to school, finish school, etc. So I served in the Navy, Desert Storm, applied to law school, ended up at Cal, and then the internet happened. So I was at Cal in the mid '90s. Internet happened. I was a summer associate, kind of like you, interning down here, and the first Silicon Valley board meeting I ever got exposed to was this little company that had 3 employees. The board meeting was in this like office in a strip mall in Mountain View. You could see Jiffy Lube from the window, and it was Yahoo. It was Jerry and David and Tim Brady and 2 other people in that little office, and yet they already had an offer from AOL to buy that little company. That's what people were talking about. That's as far as I'll go. I'll keep the confidentiality from there. But that was kind of my introduction into Silicon Valley. Ended up, working really hard with that team while I was still a student, and coming very close to dropping out. And somebody who did actually, who I had known from school, Jeff Mallett, ended up. We were at the all hands meeting for the Yahoo IPO. I'm still a law student, and then Jeff walks in. He's the VP of marketing, and about to take the company public. And that was sort of my introduction to, man, why am I staying? Why am I still in school? So I'm not the best influence sometimes, And kind of where I'm going with that, Amanda, is, I've loved this career in Silicon Valley. I've been really blessed and fortunate, and it really is about doing stuff, and at the end of the day, and valuing each other, and it's about building teams and valuing diversity in teams. And what Deb said is absolutely right. We have a long way to go in terms of diversity, and building more diverse teams where people value each other and what they bring to the table. And the businesses that do and the teams that do, I've seen really thrive and have fun doing it, like really enjoy it and build lifelong connections.
Yeah, definitely. We'll talk more about building teams and diversity, but taking us back, so you finished law school, and then eventually you started Rocket Lawyer. I know that was a few years later, but Can you tell us a little bit about that insight that led to you founding Rocket Lawyer?
Yeah, so Rocket Lawyer was the second startup for me. The first one, I learned a ton. It was also venture-backed, NEA. It was called OnStation. We were very early vertical CRM company, and we picked automotive service. So now when you get reminders to get your oil change and stuff, like, again, I remember I grew up working at a gas station, so that was my first startup, and I learned a lot doing that. And so, but Rocket Lawyer really came to this kind of passion for justice, and our mission is to make law affordable and simple enough for everyone to really, make justice affordable. For most people, the tools of justice isn't whether you go to jail or not. Although for too many it is. It's really, can you put things in writing? Can you incorporate your food truck business like Greg Lutz, one of our customers, did, who's been a customer for a long time. He owns Third Cousin Restaurant in San Francisco. Those type of folks, the kind of people I grew up with. They were small business owners, heads of household, single parents, people in a bad marriage. Can you get out of that bad marriage, and figure out child support again at a price you can afford? Those are the basic tools of justice, and we realize that with the internet you could do that. And so I'm really proud of the fact that we invented something. It's patented. It was patented in 2012, which it sounds obvious now, but a lot of good inventions do. And so it's about using the internet to create legal documents in the cloud, share them with attorneys in real time, and get advice from licensed attorneys and a network of them, which we now have all over the world, and resolve disputes related to it. That's the original Rocket Lawyer patent. And I'm really proud of the fact that we actually have built that system out, and 1 in 9 Americans has a Rocket Lawyer account now, and so it's been fun.
Yeah, that's massive. Would love to dive in a little bit about that founder's journey. So you founded Rocket Lawyer in 2008. Obviously, we all know that's the height of the Great Recession.
So quinceañera this year, 15 years.
Then, congratulations, happy Quince.
Thank you.
Then in 2020, of course, your company had to navigate the challenges of the global pandemic. And then here we are again. This year, entrepreneurs and company leaders are faced with a very tumultuous macroeconomic environment. So can you talk to us a little bit about your founder's journey with Rocket Lawyer and how you have managed to navigate all of these moments of uncertainty?
Yeah, one thing's for certain. Those numbers that Deb was talking about, they're very real. And I was raised again to know that, and to be first a happy warrior. It just is what it is. And so underrepresented folks have to be better. And if you're not, and you can either be mad all the time about that, or you can just be better and try to make yourself better. So we always, on that journey, we're trying to be good stewards of capital and figure out how to be profitable. So, our first year, we were profitable. Business was bootstrapped. And again, remember, I had done a startup before, so I had a little bit of capital to be able to do that, to bootstrap it. And we did, and it made the company stronger. So back, in the Great Recession, 2008, the first investor in Rocket Lawyer was a corporate partner. It was LexisNexis, and we were able to do that because we had significant revenue already. Significant meaning about $1 million of revenue when we raised that first money, and then from there, we went through quite a bit. It's never straight up and to the right, but one thing we've always really tried to be good stewards of capital. We did get the business to break even and better and positive cash flow. That's always been a big part of our DNA and culture. And it really, I'd be curious to see the statistics, and I think I'm going to go try to get folks to figure this out. It's not just the first round, but it's the follow-on rounds. And women and underrepresented folks just don't get those follow-on rounds done. And so they just don't. And you've got to be so much better in order to get those follow-on rounds done. Your business will fail. And so, we did. We were able to get the next round and the next round, all the way to the point where, now we raised about $300 million from Vista. And that was something that we actually, one other quick point, working backwards really does work. And so I remember my CFO and I, 5 or 6 years ago, we said, let's get the business in a position where we could do the kind of deal that we ultimately did with Vista. And we did have multiple bidders for that deal of, late stage private equity firms. And we were sort of, then we worked backwards to it. What's the business got to look like 5, 6 years out in order to be able to do a transaction like that? And because if you can do a transaction like that, you can go public. And so the question was, and I think we made the right decision in not going public in 2021, 2020, 2021, when a lot of others did, and instead, did this transaction. So I think a lot of it is being good stewards of capital and always thinking about value. And the bottom line on what I just said is, well, what value are we going to be able to deliver to, customers always, I'll talk about that more later, but to that new investor, what value are we going to be able to deliver? And we wanted to deliver value to our prior investors as well. And so it's the one thing I'll preview is the give and go, and I'll talk about that later. But giving value. What value are you gonna deliver, and make sure you work backwards to be able to deliver that value.
Right. Yeah, so it sounds like being good stewards of capital was super important to helping you navigate these times of uncertainty. We had chatted a bit about how in 2020 you were able to use Rocket Lawyer not just to add value for your investors or your customers, but to actually have an impact for those customers during times of distress and crisis. Would love for you to chat a little bit about how Rocket Lawyer was able to use your product to have a positive impact during that time.
Yeah, I'd love that. I mean, so that's kind of the mantra. It really is like customer value, customer value, customer value. So what value delivering to customers? You know, I was so excited this morning. I woke up and, you know, trying to check things early, like 5:30 in the morning, because I'm going to come down here. And one of our product managers, Dan, who's in the UK, and he runs our, who happens to be African American, and Dan is like, I mean, if you watch Ted Lasso, like you can see Dan, he is like got such a great attitude and everything, like such a great guy. And he always gets people fired up. And so he of course, he's in the UK, so he's earlier times. So he posts a review of our Android app that I guess came in overnight. And you know, we have a lot of these reviews, but he's always posting them. And he said he really liked this one, so he's always posting snippets of like reviews from, you know, either the App Store or the Play Store. This was from the Play Store. And it was just somebody saying how many times they had used the Rocket Lawyer Android app, and they said it has never failed me. Like they literally said that in the review. That kind of thing like gets us so fired up. It like makes my whole day. I'm so happy to see stuff like that. And our team has that ethos as well. Like if you're getting, you know, that kind of positive customer feedback, you know, things are most likely to work out and to just be like obsessed with it.
Right. All right, shifting gears a little bit. So from navigating uncertainty to really growing and scaling Rocket Lawyer, we talk often about how the skill set required of founders is a bit different from that of running a CEO running a multi-100-person company. So would love to hear a little bit about how you were able to kind of hone your own skill set and evolve as Rocket Lawyer continued to scale.
Hone my own skill set.
Hone your own skill set,
and evolve
with the company.
Yeah.
I think
okay, good.
We talk a lot about founders need a certain skill set, and it's sometimes different from a CEO who's managing a bigger company. So how have you been able to kind of keep up with the pace of Rocket Lawyer as a professional, as a leader, as an entrepreneur?
Okay, great. Well, I could start out by, you know, trying to, we talk about, we have these DNA principles, and one of them is like is self-awareness and admitting failure. So I got to admit some failure right now. Dan is not African American; he's British, first of all. So I messed that up. And as a black man, that's why I just say he's a black male. So there he is.
Okay, black British.
Right.
All
yeah,
right,
exactly.
Sorry, Dan.
So sorry, Dan. I messed that up.
This.
He would not be happy if
All right,
I said.
sorry, Dan.
If he knew I said that. And you know, I think, but part of it, to answer your question, is really like having these shared values and realizing as a leader how much of the leader's time has to be focused on, you know, on culture and you know, understanding the team and, you know, really focus on culture. What are your cultural principles? You know, what are the cultural values at the business? And then really being, you know, a champion of that, the culture and the values that the business, you know, that you want the business to embody. That's a big part of it. And so, you know, I think we're all on this sort of journey to grow, you know, as people. You know, and like I was just saying, one of our cultural principles is, you know, to be able to fail and to be able to retreat and then to be able to overcome. Failure, retreat, and overcome, and we do that a lot. I mean, in business, you know, you should be able to build a business where you can fail a lot, but the whole thing doesn't fail. Sort of like a ship that's compartmentalized, and you know, one compartment will flood and the whole ship will remain. So we really do look at that in business. You know, they say baseball is a game of failure because you fail 70% of the time. You can be in the Hall of Fame. In business, you only be right once in your life for generational wealth. That's, you know, but to get that thing, to find that one thing, takes a lot of iteration, a lot of failure. So it's like being comfortable with that and able to do it. So my answer would be, I've tried to grow in a way that, really, respects and builds, cultural value. And one of those really key cultural principles in surrounding yourself with people who can be self-aware and who can, stipulate to their failures almost.
Yeah.
And still be confident and still, get after it.
Would love to continue talking about values while we're on the topic. At the GSB, we're always talking about values-driven leadership and entrepreneurship. Would love to hear, in addition to that self-awareness and some of the other, the fail, retreat, and overcome values that you've just mentioned, do you have any other personal or professional values that have helped kind of guide your career and your leadership style?
Yeah, that's the give and go. I just think the give and go is the best. It's the best play in team sports. The Mbappe play at the end of the World Cup. I'm not a big soccer guy, but I saw it and I was like, that's a darn good give and go, if anybody knows what I'm talking about. So, the way it works is you give value.
Yep.
And then you give up the ball, and then you go to the goal, and either your teammate has an open shot, or you can trust they're going to get it back, and now you're going to have an open shot because the defense went after them. So we talk a lot about that kind of give and go culture at the company, and looking for people that are givers, and being very intentional about it, and sort of what are you giving? Like, what are you giving to customers? We have a freemium business model. I mean, what are you giving to customers? And you trust, or to investors, et cetera, and you trust that you're going to get goodness in return. So it's really having that, give and go mentality, and it's really worked for us.
We have a lot of founders in the room, so to get a little tactical, to share some advice with them, how do you hold yourself and how do you hold your company accountable to upholding that culture or this value of give and go?
Yeah, so we're trying to get better and better at it. Several years ago, we almost, one of the books that I really like, business books I've read, is Shoe Dog, the Nike story. If anybody has read that, or it's terrific. And they, in the book, Phil Knight talks about a time, because they had all these near-death experiences where a company was going to go belly up. They were obviously early with people were going to wear sneakers when they, in the 60s, when they were wearing loafers, right, everywhere. And so it took a long time, and we've had a similar journey. Law is highly regulated industry. It takes a long time, but then you do build barriers to entry, and sort of similar. So we looked up, maybe again like 5, 6, 7 years ago, in the middle of the company's history to date, and we felt like we'd figured some things out. We got those follow-on rounds done. We were profitable, et cetera, and we felt like we figured some things out. And so we did this sort of metaphorical blood test, and we wanted to see, what was in the people who kind of helped us get there. One of the things I'm also really proud of is Rob Elhart, the first person I ever hired. He still works at the company. Nicole Nelson, who we hired, right out of school, is now our VP of product, and she's grown in the business for the last 8 years, quite a bit. And so people like Rob, Nicole, others, it's like this metaphorical blood test, and to see sort of what's coursing through their veins to have made them resilient and all these other things. Mm-hmm. And that's how we came up with these 10 principles that we now train and teach. And so to answer your question, we saw what our best people are most successful. Happiness is important. Happiest people were made of, and we wrote it down. And so now we spend a lot of time. I spend 3 Wednesdays a month training. Doing new hire training and follow-on training, and made that commitment to try to make sure that we're all sort of a team with the same mission. That's number one mission on the 10 principles. But we're a team on the same mission, and so on. So I would say, communicating, training, those are things that we've invested a lot in.
Yeah, it sounds like you started actually with the people. What do you see in my best people? and then codified that into 10 principles. So that's awesome.
Yeah, and we tell people when we hire them, I mean, actually I tell them when I do the orientation, it's like, this isn't about turning you into something else. We hired you because we think this is what you already are. Like, right. That's what we look for.
And you personally do the trainings 3 Wednesdays a month?
Yeah.
That's awesome.
Yeah.
All right, founders, so you got to go do your training.
I stole that from other people, though. So.
All right, I think we have time for 2 more questions. Mandy, keep me honest. And then we'll go to audience questions. So start thinking about your questions over here. So Deb mentioned...
We were going to have one this morning, by the way, and I'm here.
Oh, so thank you for joining us. Hopefully you can meet them tomorrow or this afternoon. Okay.
It'll be all right.
So Deb mentioned a lot of data, some pretty awful numbers, some optimistic numbers, but one that I wanted to re-highlight is each of the cohorts, women, Black founders, and Latino founders, each of them respectively, less than 2% of VC dollars in 2022, which is not great. Would love to hear just kind of your thoughts on the challenges that underrepresented founders face when accessing capital in the United States.
Yeah. Well, first, like I said, if you think the first money you raise is hard, the next is going to be harder for most folks. And the other thing is, on the happy warrior side of things, right? It's like, it's hard for everybody. So you got to remember, like, if you're going to start a business, I mean, that statistic you said, that $1 million of sales is like a big company, it's like, whoa, right? So, but that puts in perspective how hard it is to build a business, right? It's impossible. So it's effectively impossible to do, especially like a new invention, et cetera. Like, it's effectively impossible. So the thing that will help to keep you happy, I think, is to realize is that it may be harder for you, but it's impossible for everybody. So it's like impossibly hard. I don't know it's all impossible. So think about it that way, and I think you'll be fine, right? In terms of recognizing that you chose hard work to go out and go do, and then second, it's good for everybody to be good stewards of capital. Like, it's good for everybody to say. There was a New York Times article, I'm actually giving a talk about this in Brazil in 2 weeks. There's a New York Times article Sunday, is faking it over in Silicon Valley. If some people are nodding, so they saw it, right? And fake it till you make it. No, I mean, that Warren Buffett quote that is, well, it's actually Benjamin Graham's quote that Buffett took from him. But in the short term, the market, VCs, whatever, is a voting machine. It's a popularity contest. In the long term, it's a weighing machine, and it's the same for everybody. It weighs the present value, future cash flows. And so anybody can build a company and a culture and ethos around generating cash in the future. Everybody can do that, and so why not? And so, we're not perfect, but we have set out to generate future cash, and it's been, we're not always successful at it, but it's always our objective is to generate positive cash flow.
Thank you for that. We have one last question here, and I mentioned we have a bunch of founders in the audience, so what's one piece of advice that you could leave with all of the founders in the audience?
It's give and go.
Give and go.
I mean, it is like listen, figure out what the other person's looking for, the other business is looking for, and figure out how to get them what they're looking for. That's it.
Thank you. We have time for a few audience questions. Is anyone right here who quick? Oh, we have the mic. 1 second.
Hi, this is Nikita from CareerFlow. I have a quick question. So with the current market, with SVB thing happening and with everyone saying that funding is so difficult, so then what is your suggestion to everyone who is trying to raise funding in the current market?
Yeah, great question. First of all, SVB makes me really sad. And I did work with the bank and over 2 decades, and I remember we did a lot with Harry Kellogg. Linda Kellogg, who was the wife of one of the founders of Silicon Valley Bank, worked at my law firm 25 years ago. So SVB is a big part of the sort of fabric and family of around here, and so I'm really sorry for what happened there, and it's certainly we all want to learn from it. One thing, since you said that, brought it up, one thing to learn from it is go back and look at the history. Like, it doesn't matter how many ball games or picnics you take people to or whatever, they're going to run for the hills. So back to what I was saying about taking care of your bottom line and your cash and so on, because how quickly those tweets from VCs and so forth took Silicon Valley Bank down, and they thought they were pals. Okay, so just remember that as you go about your business career. I think trying to identify and I think sometimes people don't look for ways to bootstrap their concept. I think they start out with a presumption that they're going to build their concept and commercialize it with venture funding or whatever, and it's really worth spending a lot of time and racking your brain about, if I could say one other quick thing, about how to make it work without venture funding. And so I started my career working right down the street on Sandhill Road here, and one of my mentors, Craig Johnson, I wrote a LinkedIn post about this called Find the Pony in a Pitch. Craig, we used to go to these meetings where entrepreneurs would be pitching, and our law firm, Venture Law Group, actually would invest in some of our clients, really push the envelope. And so we're getting almost like investment pitches of clients like Yahoo, et cetera, Web TV, Hotmail was a client back then, et cetera, or Web 1.0 companies. And he would say, 9 out of 10 comments that you get in these meetings are going to be why something won't work. And as you go through, and those of you who are already out there maybe know what I'm talking about, those of your students will maybe see, 9 out of 10, sort of critical thinking in these meetings is why something won't work. And so Craig was like, Charlie, I don't do that. I just rack my brain about how I could maybe help them make it work or how it could work. And then if I can't figure that, it's much more fun to go through meetings that way. And if I can't do that, then I just don't say anything, and off they go. And I love that, and I've used it, ever since. It is a lot more fun. So one of the things to maybe rack your brain about is flip it and go, I'm only going to raise money if I just cannot. I'm going to ask ChatGPT how to do it without raising money. I'm only going to do it if I can't possibly figure out a way to do it without raising money.
Great. Up here in the front. Oh, there are two here. But yeah, let's see.
Yeah. First of all, congratulations for your business, because many founders like me wish I could have half of the success you have with your company. So congratulations. And my question is have you made all the decision in your company by yourself, or the big decision? Because if not, how did you overcome the time when you fail, when you don't believe in yourself? And if yes, if you share the power with the co-partners, when the tension comes, did you just fire them and hire a new one, or how did you? Yeah, because that's what I did. But how did you, solve the problem between the differences among opinions and so the big decision? Yeah, I'd like to know that. Thank you.
Yeah, so all the bad decisions and failures were mine alone. So that was just pure me, and all the successes were the team, and continue to be. And so I would say if you're not comfortable with that, it's going to be a long, tough time. if you're not comfortable with that reality. So, you know, the leader owns every failure, 100% without exception. And the success is shared. And so, and you know, we've had a lot of failures, so I've screwed up a lot. And in those orientations, I tell people, I tell them, because I want to disabuse them of this notion right up front, as soon as they come to work with us and be part of the team. Most of my decisions are going to be wrong. They are. And we're going to go do it anyway, you know, and I'm going to have been dead wrong about it. So you can tell me when it happens, it's fine, but remember I told you so first. And so that's kind of how it is. And I think, you know, I could go on, but I think that's going to be kind of my answer to your question. There's certainly accountability, and you know, we have an accountability culture as well. I think the best way to have an accountability culture is where people, you know, in basketball, I never used to understand why, you know, somebody would foul somebody and then they like have their hand up, right? But you know what? If I was coaching a basketball team, I would say, you got, like, Draymond, you got to do that every once in a while, right? Because then you have credibility with the refs, okay? You can't argue every call. And so I just think having that culture where, you know, people can admit failure is critical to ultimately having a lot of success.
Fail, retreat, overcome.
Yeah. I don't trust anybody, because I don't trust anybody who can't talk about failure, like, because we all have it. You know, we just do. It's part of being human.
Thank you, Charlie, for being here. To your previous point, so I'm an entrepreneur that has bootstrapped companies and sold it to a PE firm, and now I'm trying to figure out if VC is the path for me or not. And one of the advice I've been getting is that in order to attract good talent and go fast and build big, VC money is a need. How do you balance bootstrapping?
I'm sorry, it's a what?
It's a necessity.
A necessity,
like,
yeah.
How do you attract good talent and test fast when you're one of the rare cases I've heard that bootstrapped first and then went for VC money? How do you mix that in reality? Because I believe that some VCs have told me, if you don't have the growth numbers, we're not going to put money into that.
So the question is how do you get a team without the money, before the money? I'm not sure I understand yet.
I guess it's two questions. One, how do you attract good talent without the money? And how did you go around bootstrapping first and then raising VC money for them to be interested without the growth numbers? Yeah,
I mean, you know, we always stand on the shoulders of others, first and foremost. So that same mentor, where I really got my start, was, you know, they hired me at Venture Law Group, right, out of Cal. You know, they hired me. I worked really hard, right? At, you know, I told you I almost dropped out of law school, and you know, I was commuting from Berkeley, where I was supposed to be going to class, but I stopped going to class, down here, working really hard. I paid off my student loans really fast, but working really hard, and I think got credibility with folks. So the first, you know, $200,000 check that I got to start the first company, you know, came from the partner at the law firm that I was working for. At the time, and the first VC money was from VCs that I had done deals for as an intern, and I only practiced for 18 months. But I, you know, slept in my office and so on and so forth, and they backed me, right, in that first business. The other thing, so, you know, it's that give and go kind of thing again. The other is I have seen, you know, look, experiences, but I've seen hard work really pay off. I mean like extreme hard work, like pay off. I have seen that happen, and so that may be, you know, not. Anyway, I'll leave it. I'll let that stand on its own. The other thing is, you know, there just is something to, you know, knowing what your mission is, what's the purpose, And then, there's people who I mean, more than money, more than a lot of things, like when we we survey our employees, and the number one of those 10 things, the number one thing that leads to people staying with the company and being happy with the company, when we look at folks who've been with the company for 5+ years, is connection to the mission. And so, like, the first guy I hired, like I say, we still work together. It's the mission, right? And so, as an entrepreneur, you do want to kind of feel like, you could get dropped out of a helicopter in the snow naked and walk out, 6 months later with a whole village behind you, right? And I think a lot of that stems from, having a very clear sense of purpose and mission, and then talking it up with people and seeing who wants to accomplish and achieve the same thing that you do and is willing to, to work together to make it happen, and to own all of it, meaning they have to own the fact that we don't have any money yet. We got to get the money in order to the mission. And so everybody kind of owns what it's going to take to achieve that mission together. So it isn't, I mean, it's got to, like, very quickly not be all you. and I think a way to that is having a mission and finding folks that are as passionate about that mission as you are.
Thank you so much, Charley, for joining us and for kicking us off. Huge round of applause.